Hi everyone, welcome to Buy Now, Sell Now, the weekend edition. I'm Mubina Kapasi and this is the show where we answer all of your individual viewer queries, get in a portfolio check as well as get you top trading ideas as well as wealth creation ideas going forward for the markets. Let's introduce our guests then and tell you what all we have lined up for you on the show today. So first up, we have with us Avinash Gorakhshekar on the fundamentals as well as Chandan Taparia to address the technicals of the market. Welcome to the show, gentlemen. Thanks for joining us today on Buy Now, Sell Now weekend. And what all do we have lined up for you up ahead? Well, first up, we have queries coming in from result candidate Infoys, Kitex Garments as well as MBL Infra. Not only that, later on the show, we will be addressing Mohit Kumar's portfolio. So let's get on straight with it then and bring on board our very first query for today. Mahesh has sent in his query and he's from Mumbai. He says he has bought 500 shares of Infosys at 944 rupees. He wants to know what is the target if he wants to exit the stock. Clearly, he wants to now book out of this investment. The question, of course, is that is it a good idea to book out now at about levels of about 940 odd rupees, 976 odd rupees, or do you think that he must hold on to his investment? There may be perhaps some more returns to be made. Avinash, I'll get in your perspective first. We did have the Q1 numbers that had come by. Not such a bad set of numbers. More importantly, they'd maintained their revenue guidance, even up there, in fact, dollar revenue guidance. Do you think that it's a good idea to hold right now, or maybe 976 is a good time to exit?
No, I think, Mubina, I think looking at the Q1 numbers, my suggestion is that he should hold on. Clearly, numbers have come in much better than what the street expected, and with the revenue guidance getting upped marginally, I think that shows a little bit of confidence from the management that the company is looking forward to a better set of numbers in the second and third quarter. Although the headwinds continue to be challenging, I would believe that the investor has actually bought in at the current level, so he should hold on. I think the one positive fact about the results was that they have allocated about 13,000 crores for a potential buyback, and I think this is likely to be announced in the next couple of months. So I think obviously the buyback should be done at a reasonably attractive premium to the current market price. Till then, I think he should hold on. I would believe that something like 1100 is a price target which he should keep in mind, which is very reasonable and where he could possibly exit at these odd levels.
Okay, don't exit as of now. Avinash is saying 1100 rupees is where the stock could reach. That's the time when you perhaps must look at exiting Infosys. Chandan, let's understand a technical call. Then we did see the stock in fact touch the 1000 rupee level, though subsequently on Friday's session we gave up most of those gains to finally shot up at 976. Nevertheless, our investor is making some money even at those levels. What would you advise him to do?
Yes, this stock has got stuck in a trading range between 900 to 1050 since last 9 months, and recently it has taken support near to 920 zone, that is the lower band of the territory, and bounced back smartly by around 18%. So I think the stock has potential to retest the upper band of the zone, which comes near to 1040, 1050. So he can continue to be with the position by keeping the stop loss near to 920 for an upside expected target of 1040, 1050 levels.
Okay, that's of course the view coming in when it comes to Infosys. Let's move on and bring on board our very next question. It's from Vara Lakshmi from Chennai. He says that he's bought 50 shares of Kitex Garments at 303 rupees per share. Should he hold or exit? He's a long-term investor. Losing some money when it comes to Kitex Garments. However, with the advent of GST, the question of course is how does it bode for companies like Kitex Garments in the garment wear segment? Avinash, let's understand your perspective first on Kitex Garments.
No, I think, Mubina, I would be a little apprehensive on Kitex Garments because for the last couple of quarters, I think numbers have not been very encouraging. In fact, the market prices also reacted negatively, and I think in terms of the upside growth potential, I would believe that in the near term, I don't think there are going to be many re-rating chances, considering that earnings are likely to be under pressure. I would suggest that the investor should actually switch over to some other stock. I would suggest him to look at a stock like NBCC, which trades at around 210 odd levels, and where the risk reward is definitely better. I think he can switch over and probably recover some of his losses which he is incurring now. So I think a switch would be a better strategy rather than holding on to Kitex.
Okay, a bit circumspect when it comes to Kitex Garments, the outlook going forward for the company, and Avinash is saying should look into perhaps moving into an NBCC, which coincidentally of course is on the anvil of announcing a Dharavi related redevelopment project. Chandan, let's understand your perspective on Kitex Garments. What would you advise our investors to do?
Yeah, this stock is continuously falling and underperforming from last 1.5 years. but now it has multiple support near to 260 zone and finding multiple hurdle at 300 level. So if it moves above 300, then only some bounce back would be there, but as of now 260 is likely to act as support. So if he's holding the position, I'll suggest to keep the stop loss near to 260. If it manages to hold 260, then it can move to 300, and above that only we can relook at the counter for the next move.
Of 260 is what Chandan is advising. Keep your stop loss at when it comes to Kitex Garments. Let's move on to our next query. It's coming in from Krishna Reddy from Hyderabad. He says he's bought 250 shares of MBL Infra purchased at about 60 rupees per share. The question is, should he hold or sell? He is once again a long-term investor. Losing big money when it comes to MBL Infra because the cost price, rather the market price, is actually halved from the point at which he has bought it at. Avinash, does it make any sense holding on to this investment given the kind of losses he's sitting at?
No, I think in case of MBL Infra, the positive part is, the company has a reasonably good order book, and I think now with the expectations that interest rates could be cut, I think for most of working capital sensitive companies, especially like MBL Infra, I would believe that if the investor has got a slightly longer term horizon of at least 18 odd months, then only I think the investor should hold on. Already he has lost significant money, his capital has eroded quite significantly. So I would believe that unless he's got a slightly long term kind of time window, then only he should hold on. I think longer term prospects definitely would pick up once the working capital cycle improves and the order book also improves.
Okay, well, that's MBL Infra for you. The view coming by from Avinash. Chandan, is there any possibility that perhaps the stock could retrace back to, well, the cost price, of course, is a far cry really from the current market price. But what would you advise him to do on the technicals?
We don't have coverage on the stock and it is continuously falling down. So I don't see any change in the trend reversal. So better to avoid and shift to the good quality stocks.
Okay, fair enough. Yes, the stock has been on a long-term downtrend, so really doesn't make sense holding on to this kind of investment. Perhaps look into investing into some good quality stocks, move away from this investment. Well, I hope we've been able to answer all of your individual viewer queries. We're going to slip into a short break. When we come back, we'll be addressing Mohit Kumar's portfolio. Don't go anywhere. Welcome back. Thanks for staying on with us on Buy Now, Sell Now weekend. And it's, of course, that time of the show when we address all your individual portfolios. Today, the investor whose portfolio we'll be discussing is Mohit Kumar. He's 35 years of age. He's currently employed and he has a long-term investment horizon of anywhere between 1 to 2 years. Well, while he has purchased small quantities of stocks, the interesting part is that he has purchased them all early on, and hence he's sitting on investments that are giving him returns of more than 100% for many of his investments. So let's run you through each of these individual stocks that he currently has in his portfolio. Adani Ports, 46 shares of that purchased at 266 rupees. There's Ashok Leyland from the auto space purchased at just 31.79 rupees per share. The stock price, of course, is at 100 rupees. So good returns being made over there. Asian Paints is another one that's doing wonders for him, purchased at 637 rupees. Moving on from the banking and finance space, there's a whole host of stocks that find a mention. Axis Bank at 293 rupees. Bharat Financial as well purchased just at about 210 rupees. It's a pity he's picked up only 60 shares because that one as well has now propelled to the 700 plus mark for him. HDFC Limited purchased 15 shares at about 820 rupees, and HDFC Bank, again a smaller quantum of 28 shares purchased at 604 rupees. More from the auto space, Hero MotoCorp, just about 11 shares purchased at 2,270 rupees, and Hindalco, 217 shares purchased at 106 rupees. So like I mentioned, at an early age, he has got into the equity markets, and that's something that's clearly benefited his investment portfolio. So let's break down all of these individual investments and bring on board Avinash Gorakhshekar's opinion on all of them. Avinash, I think you'll agree with me, the fact that he's entered into these investments early on is something that's greatly benefited him. Let's first understand your perspective on the first three stocks, Adani Ports, Ashok Leyland as well as Asian Paints.
No, I think he's definitely gotten at the right price and he's got a nice balanced portfolio. So, I think if you talk about the first 3 stocks, Adani Ports, I think he should hold on. I think prospects definitely look quite encouraging, and our sense is that not only FY18 but even going beyond, the infrastructure space should do well. I think he should look at a target price of around 402. As far as Ashok Leyland is concerned, he is in the profit by a significant margin, but looking at the kind of Q1 numbers and the kind of performance from Ashok Leyland expected in FY18, I would believe that he should look at a target price of 130 before he can book out some profits. And as far as Asian Paints is concerned, this is also a frontline paint company. I would believe the GST has now got implemented and obviously would benefit the company in terms of increase in their market share over the next couple of years. So, here I think he should look at a long term holding and look at a target price of around 1300 here, and he should hold on till that time.
Okay, hold on. There's more returns to be made in these stocks. Let's move on in the next few. Axis Bank, do you think, Avinash, that the NPA problem should be a bit of a worry for him when it comes to this investment? Bharat Financial at 210 and HDFC Limited at 820. What's your call?
No, I think Axis Bank also he should hold on. I think the biggest plus point for him is that he's got in Axis Bank at a reasonably lower level. So, his margin of safety is pretty good. I think he could look at a target price of around 570 here. I think in the private sector bank space, Axis Bank continues to be a large player, and I would believe that FY18 should be a lot better than FY17. As far as Bharat Financial goes, again looking at the kind of opportunity in the microfinance space, the short term may show a little bit of volatility, but the longer term prospects continue to be good. Here she should hold on. He could look at a target price of around 860. And finally, in HDFC, I think since it's the parent company which holds a considerable stake in all the other related investment, plus is a premier name in the housing finance space, I would believe that this is a long term kind of portfolio stock. He should look at a target price of around 1800 here and continue to hold on.
Okay, that's of course the view coming in on Axis Bank, Bharat Financial as well as HDFC. There's another HDFC that finds its name, find a mention on his list. There's HDFC Bank, again purchased at a very small amount of about 604 rupees. The stock of course is trading at about 1600 odd rupees. Hero MotoCorp at 2270 and Hindalco at 106. Avinash, what would you say about these 3 stocks?
No, I think all these stocks are blue chips, and as far as HDFC Bank is concerned, as I mentioned, it's one of the premier private sector banks, has been a very strong compounder for investors over the last 2 to 3 years. I would believe that he should continue to hold on, because this is one bank which is going to surprise the markets with its earnings trajectory even going forward. So, look at a target price of around 1900 here. As far as Hindalco is concerned, again from the metal space, we saw a very good number coming in from the previous quarter. Not only aluminum prices are firm, but I think going forward also the metal space, Hindalco should do well. So, he should look at a target price of around 240 here. Again, he should hold on. And as far as Hero MotoCorp is concerned, again with a good monsoon and hopefully with a better volume number expected in the next few quarters, I would believe that if rate cuts do happen, which is possible in the August RBI policy, this is one company which should benefit significantly within the two-wheeler space. So, look at a target price of around 1350, and till then continue to hold on the stock.
All right, that's Avinash's view on the entire portfolio coming by. Well, interesting one really, and I hope it serves as an example to a lot of our young investors and viewers out there. Start off early and you will be able to build a profitable portfolio and have a good amount of returns on your savings going forward. But please do remember that this is only a model portfolio. Do consult your individual investment advisors before taking any investment decisions. We'll slip into a short break. When we come back, lots more technical ideas as well as wealth creation ideas coming by for you. Welcome back. Thanks for staying on with us on Buy Now, Sell Now weekend. Let's talk about the markets then, and boy, what a week it has been. Of course, there was a bit of a trading glitch on Monday's session, but nevertheless, the markets bounced back very strongly. We came very close to the 9,900 mark, but unfortunately failed to hold on to that coveted mark. And of course, the question is, will 10,000 be hit in the following trading sessions? Well, it's only time that will tell us that, or rather give us that answer. But let's understand what exactly is in store for the week ahead when it comes to the Nifty as well as the Sensex. Chandan, over to you first. A very strong trading week, gone by, perhaps having to do with the P-note regulations or anything else. But what do you think is in store for the markets going forward?
Yes, in the week, the market is given the breakout above 9,700 zone and witness a strong rally of around 2% on week basis. Market is continuously making higher top higher bottom formation from last 9-10 trading session, and every time your supports are shifting on the higher side, which clearly indicates that this momentum is more leg for upside. Recently it has surpassed the hurdle of 9,700 zone, and now the base is shifting to 9,850 levels on the short term point of view, and now a hold above 9,900 on next trading session may take the market to 10,000 plus kind of levels. So overall sentiment is positive. A weekly closing also indicates a strong momentum to coming forward in the next week.
Well, yes, the momentum certainly seems strong for the markets. But, Avinash, the question that many are asking, that do you think that this rally is only about of short covering, and that, perhaps we may see some, profit booking of sorts coming by in the next week?
No, I think my guess is, Mubina, I think profit booking may not come in, this early, although, a large part of this rally can be attributed to the short covering which has come in following the SEBI P-note directive. But I think overall, it seems very much possible that even 10,000 for the Nifty is not very difficult now. We are very close to 10,000 levels. I would believe that, the weaker stocks which have actually gone up by short covering could possibly see some profit booking once this month gets over. But overall, I think 9,700 is going to be a crucial level. As long as we maintain these levels on a closing basis, I think it's going to be a buy on decline market, and I think clearly the result season is on. So you're going to see a lot of stock specific activity in the coming days.
Well, yes, we'll keep it stock specific then, Chandan. Given the fact that you have such an optimistic view on the markets, it's imperative to ask you, how do you think investors should play the markets? How do you think traders should play the markets? What are the stocks that you have for our viewers?
Yes, in line with the Nifty, Bank Nifty also given the breakout and hit the new lifetime high near to 23,950 kind of level. And this momentum in the Bank Nifty may take it to 24,100, 24,250 kind of level. So recommending to go long on most of the private and the PSU banks. So first it is buy on Kotak Bank. So after the decline or the consolidation of last 2 weeks, the stock has again managed to gain with the rising volume. We have seen open interest addition, and the stock is all set to hit this immediate high territory. So recommending to buy with a stop loss of 960 for an upside target of 1,000 level. Second trade is from the metal space. We have seen buying in most of the steel and metal companies, and major trend of the stocks are positive. Earlier it was finding hurdle near to 210, 211, and recently it has taken support at the same zone. So it is all set for the new high territory. One can buy with a stop loss of 208 for an upside target towards 232 levels.
Okay, those are some individual technical stock strategies coming by. But for those investors who want to park their money safely in equities for the long haul, Avinash, what are the stocks you'd advise?
Yeah, I think we like two stocks. From the housing finance space, we continue to like Diwan Housing Finance. We believe that, within the housing finance space, it definitely is well positioned to capitalize from the affordability housing kind of segment. And since they operate largely in the tier 2, tier 3 markets, we believe that FY18 should be a very strong year for the company. In terms of the asset quality, the company has a very strong asset quality record. Loan book growth, according to the management, has also been very strong and should average around 18-20% in the current year. Our sense is that, looking forward with a better, reasonably strong loan book growth and a good monsoon, I think you could see very strong numbers coming in FY18 and 19. We are looking at a target price of around 550 over the next 12 months. The second stock is from the telecom product provider space called Sterlite Technologies. We believe that, looking at the big data consumption opportunity from 3G to 4G plus the kind of increase in smartphones, Sterlite Technologies should benefit because it's one of the most integrated players in optic fiber as well as optic fiber cables. The company has a very strong order book of almost 3,000 crores, and our sense is this gives a very strong visibility to the company's business over the next 12 to 18 months. So here also I think any dip should be used to buy the stock. We have a 1 year target of around 225.
Okay, so Dewan Housing as well as Sterlite Technologies are the two stocks that Avinash is advising. Thanks a lot to both of you gentlemen then for joining in and helping our viewers out with their individual queries. And thank you viewers for tuning in to Buy Now Sell Now Weekend. This is all that we have for you on the show. We'll see you of course next week, same time. Until then, have a good weekend.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.